Good afternoon. What we have here is Priceline.com on a monthly chart. We're going to be going through the high flyers. We're going to go through the 52-week highs and how they've dropped down, and I'm going to go through it quickly. We consolidated 2011 on a monthly level. We broke up higher and we pulled back that 10-month and 20-month, and we broke out in 2013 to an all-time high in Priceline. They did extremely well on their earnings. But we told you that there was going to be a big correction coming. And there has been, because I'll tell you why. If you would have listened, and we told hedge fund managers and everybody alike, institutional people, different various firms, the high was 1378. The current last print was 1179. That's a big reversal, and we're testing the 10-month moving average. We're going to go to Netflix. We told you that Netflix was at an extreme high. And the part that we told you about, which is very important for you to understand, is where Netflix had the high right here. And it did. And it went parabolically up on this monthly chart. And you dropped $100 in the high flyer in Netflix. Let's take a look at the biotech. Now remember, these stocks that had these extreme bull runs, they needed to pull back and shake out the bull. So therefore, on a monthly level on BIIB, you've had a pullback from 350 down here, testing the 10-month moving average. And the 10-month moving average is 279. So you know. Another high flyer, Wynn Resorts. Look, you can see that 2013 consolidation. That's the high up there at 250. We made that low in Wynn recently. If you really want to pay attention, it was time to get out of the way. And you can clearly see from 250 down to that 10-month moving average. It's very bullish. But listen, people remain on the sideline. And just remember, as they go through their corrections, there's going to be some good buys there. One of the things that we're going to show here is GOOGL. And it had a 7-for-1 stock split. You got GOOGL and you got GOOG. One of the things that we're going to show you is where this was one of the best stocks in the universe. And we've been covering it from day one. And we could see that monthly rising consolidation with the 10 months rising. We can say to you honestly that it had that big split. And $1,228 is where it did the split. And see, now we're down here to 533. That 10-month moving average is a support level. Oh, people that loved Amazon, once again, it's at the 20-month level at support. And not only that, Wall Street had treated this name far too good, and it too had a 408 down to 308. That was a $100 drop, and people are left hanging up here just like they did in the dot bomb days and the 2008 days. Listen, razor thin margins and profits on Amazon. Another one that we really like, and it was a high, and it's a high flyer, REGN. It's in the biotech. Buy the dip, buy the pullbacks. When they do pull back, it's on the 20-month moving average. It's a good place to be. These are the very strong stocks that I'm showing everybody in this one setting. I'm showing you an all-time high right now in calendar 2014. I'm showing you a 2013 monthly base with the beginning of an ascending breakout to the high right there of 184 REGN and ALXN. Both look very familiar. So ALXN has pulled back, tested that 10-month, and it's going sideways. It needs to pull lower. Another big bellwether with high movements, ISRG. Now in 2013, when everything else was going high, ISRG kept making lower lows, and we just hit another high here. And look at the trading ranges on it, because I can tell you right now on that particular stock, we hit a high of 370, but the 52-week high in this cycle was 541, and it dropped miserably through the monthly moving averages, and we are going to go lower in ISRG. Now, another stock that people are familiar with, which are good for market makers and intraday traders, listen, Tesla was a great company. and it had its share. But look at those pullbacks from the great earnings. Look at these highs up here. You have to know one thing about Tesla. We said it was going to come down, and it did a couple of different times. We're going to let you know that 265 was a high. We are also going to let you know that that current low is 206. It's had a big correction, and it's overbought. And these all trade in either the Nasdaq or the S&P. Now, I'm going to show you another one that's been left for dead. This is Apple Computer. Now, Apple, in various different earnings, the last, not this quarter, but the last quarter and a quarter after that, they couldn't do anything right. We are right back up here at all-time highs, right below that 600 level, and that eventually Apple would go up, and it has. The thing about it is it was oversold here, and right now on the monthly level we got things pointing up. One thing I can say for sure is the following, is that in the very short term, Apple opened at 592, 594 is a high, 589.71, and currently, so you know, the 52-week high is 599, right below that 600 handle where we said it would go. As we move on, we have other great stocks such as ILMN. What a beautiful parabolic ascending off of that 2011. Now, it's extremely overbought, and you shouldn't be buying these things up here at the high. And we have just started the correction right now. And I can tell you wholeheartedly, opened at 140.73, 141. The low was 137, and the last print was 139. But that 52-week high was 183, and we've had a nice pullback clear down here to the lows, like I told you, at 137.36. FFIV had a struggle, and it didn't come back online until it got cheap. In 2010 and 11, we went parabolically down. We tested that. Now we're right back here in that monthly breakout. And listen, there is a turnaround story on the monthly chart, but once again, it's a little bit overbought, but it's a good buy. It's part of the internet and their services on FFIV on the calendar 2014 high, and the earnings have not been bad. I will tell you the high was 116.71 and the low was 103 here now. And the bullish part about it is all of these monthly rising monthly moving averages, and that's a monthly one. Okay, so you got the high, and then you have 3 months going lower, as it should, to test these monthly moving averages before breaking higher again. Another one that we're going to show you is TRIP. It too had a great 2013 base to this high. So let's look at it right here. This stock made a high of 109.79, and now it's the last print was 182. So it's had a fairly significant correction below the 10-month, and once again, these stocks will be viable. Celgene and the biotech. So when you look at Celgene and where all that good news in 2012 and 13 played in, we've had a great pullback. It's below the 10-month. It still is a viable stock. Once it gets down there and gets oversold, they have a great pipeline. Let's go to Baidu, BIDU. Now, it's a Chinese internet stock. Yes, in 2009, we rallied to all-time highs. Then we pulled back miserably, and then we rallied up in 2013. We just reported the earnings, and it hit. I'm going to just let you know that that high on that earnings report was 189.34. Yeah, and the low in this particular cycle is 158. Now, this particular low here is where the real buyer stepped in right above the 140. And now we went up here, but I'm just letting you know that the 10-month moving average is rising on Baidu and what you could expect out of it. Now, here's another one called EXPE, Expedia. Now, look at where that 2013 base was. You can see that that was a great high up here at about $87. The monthly chart is very bullish, but needs to come back and test those moving averages. Until then, I'd stay on the sideline if I were you, if you know what's good for you. GILD, one of the best out here now in that biotech. And it's proved itself from 2012. We have all of it. We told everybody that the biotech was coming back in 2012. Monthly consolidation, ascending to the tops. 10 months is giving it support right now. We would prefer to buy the dip before it rips to a higher high. Great business model in GILD. Another one that we're going to show you is called Amgen in the biotech sector. Now, Amgen was a little bit of a lagger, but everything in the biotech did exactly what we said in 2012. That is where it got a great move. And that calendar high right here in 2014, you want to buy the dips, but that calendar high on Amgen was 128. And currently, it's come down to the 112.43, and it's below the monthly, and that 20 month is 105. That's where we would look at buying Amgen. SNDK monthly chart. Look, back in 2000, we were trading SanDisk, and it was a great move up here. And we were there in 1998. We also were here when we made those lower highs up here on a monthly level, and it crashed. But now let's just take a look at what SanDisk has done. SanDisk is overbought. It's going to pull back. And you can see that ascending breakout, rising 10 and 20, is very bullish with the 50, 40, and the 200 way back there. But let's just blow up that consolidation. And we've had very good quarters back to back on the earnings. And you can see right now that SanDisk had put that high in of 86.56. That was its 52-week high, right up at the high. Now, fundamentally, everything has turned around in Nasdaq. I mean, in the Nasdaq it trades, and it looks identical to it. It's very, very bullish by the pullback. Tractor Supply, TSO, Tractor Supply, yes. Listen, Tractor Supply was one of the greatest bull runs again. And it did start in 2010, and every dip was viable. Yes, that 10-month moving average is rising all the way up. Uh-oh. Sorry to tell you, though, it's below it. So let's just take this piece of the chart, and I'm going to be happy to tell you that the 52-week high was 78. I'm also going to tell you that you're below that moving average. They've turned their business model around and whatnot, and it's been a great stock to buy, and the calls and the put and the options, but you're below that 10-month moving average, even though that it's rising. We start May right here. Stay tuned on Tractor Supply. WDS, Western Digital Corp. We all know what they are, and not only that, they've been a great place to be. Monthly level breakout in 2009. It pulls back, it consolidates here. We're extremely overbought, so let's take the bottom of that 2013 breakout. Now remember, the quarterly earnings were quite well, and I just want to point out to people to be careful on WDC. That hit $95 up here on the 2014 high. It did. And then it's come down here from $95. That blue line is a 10-month. It's rising. That's bullish. We're going to look to see where this whole 2014 trade comes to. We do know one thing, though, that Tractor Supply is to buy the dips and sell the rips. Whole Foods right here. That's Whole Foods. I do all my shopping there. It's a great place to go. They have great services there. They're having a little bit of a challenge right now, and we can clearly see that the 2013 highs, they reported earnings, they dropped their estimates down. You're below the 10-month and the 20-month. At some point, WFM will be a buy again. It made that high up here at $65, and now it's right around that 50s below the 20-month and the 10-month right here on Whole Foods. CHTR, Charter Communications, all-time high, 10-month moving average. It's been a great place in 2013. Monthly breakout. We've been covering it forever. Their earnings and fundamentals are starting to come to life. However, you do not want to buy the tops. So I will just tell you right now on Charter that 144 was a 52-week high. I want you to know that. And also, we had that pullback down here below 120. I'll just show you what 14 looks like right now. This is where they stepped in. You can see that long wick right down here. It was almost, I would say, well, here, let's just take a look. That is the dip buyer down there, right around that 117. They stepped right in. Remember that we made a lower low from the previous month here. And we got all eyes on that 10-month rising moving average for the month of April right here. And it's a very bullish stock to buy the dips, and check your fundamentals, do your homework. Here we go with the Nasdaq 100 where these stocks trade in. I'm going to tell you that back in the dot bomb days, I was there. That was one of the greatest breakouts off of that 1996 expansion, and it gave it all up. We rallied up in the Iraqi war and we kind of consolidated, but look, when we got to the lows down here, this thing has just been on fire. And I mean fire. And we are overbought on this monthly level. It's a Nasdaq 100 composite. Those stocks that I showed you, they're all in that Nasdaq 100. Now, with those stocks pulling back, this Nasdaq 100 has been on fire in its bull run for many years now. And we're saying that it's overbought right now. And it is. And we've been telling everyone there's a lot of money on the sideline that wants to come in, but they want to buy the lower dips now. And not only that, you can get involved with SMF, stockmarketfunding.com. All you got to do is call us at 702-685-0772. We will work out whatever kind of plan you want with your trading or investing, and you want to learn the pros and the cons. You want to learn how high frequency trading is working in these and how they pump these things to the highs off of this great bull run rally. I'm going to conclude it right now as we have 1, 2, 3, 4, a 5-month top, and we got a bullish 10-month above the 20-month. This is about as bullish as you could want, but you got to remember that this bull run has been multiple years now. It started right there. Look, and it did. Back in 2009, we had those lows there, and we consolidated month after month after month. Then 12 and 13 is where we made these monthly consolidation. Remember, a monthly ascending consolidation that breaks out, and this is the follow through right now, and we're starting the 5th month of 2014. Those high beta stocks that we told you about are in that Nasdaq 100. And I would tell you right now, I'm telling all our traders, all our international traders, U.S. traders, whoever you are and whatever your engagement is in markets, once again, join us for 5 free days. Take a look at what we said before the fact. The pullback to 10% is going to happen this summer. This will be a benchmark as the Nasdaq 100 composite. And you can see that narrow range. It's bull pattern all the way, but it's overbought.